Now, there are two stocks that are doing quite well. They are doing everything right. They're growing, and these two stocks you might want to consider buying the dip on. Hi guys, it's Stock Curry, and as the market sell-off continues, we're starting to get some good buying opportunities. In today's video, I'm going to give you two stocks you might want to consider buying, as well as all of the market news you need to know to be successful. So let's get into it! In order to find the best buying opportunities in this market, we really have to understand the market sentiment and what investors are looking for. Right now, the market sentiment is extreme fear. Now, 18 is pretty low on CNN's Fear and Greed Index, but it's not the lowest that we've ever seen. CNN's Fear and Greed Index hit a low of 3 back in May, so it definitely has further to fall, meaning stocks could fall further before they bottom out. Now, we're already at the June lows, so if stocks do fall further, which they're on track to, then that means we're going to break below the June lows and we will hit new 52-week lows. You can see here on CNN's market momentum indicator that it is at extreme fear based upon the continued downturn in the markets. But the stock price strength is only at fear, meaning large caps have not yet fallen enough to bottom out. And stock price breadth is also only at fear, meaning there's still a lot of people buying stocks. We have not yet hit that full-on emotional capitulation where everybody just sells everything. So we definitely have more selling to go before we bottom out. And another fear gauge, the VIX, just hit its highest level since June. Despite that, the VIX is only at 30, and there were 4 other times this year so far where the VIX was higher than where it is today, again pointing to more declines in the market before we bottom out. Keep in mind that with the VIX, this normally has to hit 40 before we officially end a bear market. So all of the fear and greed indexes that we have available to us are pointing to the market continuing to go down. Now, they are pointing to the market being near a bottom, but not yet at one, meaning we more than likely still have about another month of selling before we finally bottom out. That lines up perfectly with the historicals. If you want to know more about how the market historically trades, you can go watch the video that I uploaded yesterday, and I'll put a link for that at the end of this video. Let's talk about some of the news and indicators that's pointing towards the market continuing to drop, as well as a few stocks that just aren't doing things right that you're going to want to avoid. Then we'll talk about 2 stocks that you might want to consider buying. One of the things that could push the stock market down is a hurricane entering the Gulf of Mexico, which Hurricane Ian is now forecast to do on Wednesday. The reason a hurricane hitting the Gulf of Mexico is a bad thing for the stock market is because the Gulf of Mexico is full of oil refineries. As hurricanes enter the Gulf of Mexico, those oil refineries have to be taken offline, and that reduces the amount of gasoline that is available here in the United States. As a result, oil prices and gasoline prices tend to go up whenever a hurricane enters the Gulf of Mexico. Those higher oil and gasoline prices usually result in the stock market going down. And in fact, BP and Chevron have both already turned off their offshore oil production ahead of Hurricane Ian. So this could cause gasoline prices to rise once again, which will cause inflation to go up, which in turn could cause the stock market to go down. Now let's talk about 2 stocks that you're going to want to avoid since they continue to do all the wrong things. Then we'll talk about 2 stocks that you're going to want to buy. The first stock to avoid right now is Netflix. Netflix is struggling to gain subscribers, and they're now opening a video game studio in Finland trying to boost their audience numbers. Unfortunately, fewer than 1% of Netflix subscribers are engaging with its games, so there's a good likelihood that this attempt to bring in more subscribers with a video game studio is going to fail miserably and just end up costing Netflix money. Despite falling significantly over the past few months, Netflix still has a PE of 21, and it remains overvalued. I do think NFLX will continue to fall. I would not even consider this stock unless it got down to $150. Even then, I would be cautious as they continue to lose subscribers. You might also notice how Netflix was once trading at over $700 a share. This is a great example of why you do not just want to go out and buy the dip on any random stock that happens to be falling. You have to be very careful about your stock selection whenever you're in a bear market like we're in currently. The next stock that you'll want to avoid is DWAC. This stock has had multiple issues as it tries to take on Trump's media company, including lawsuits and a major pullout from investors. As of Friday, DWAC had lost $138 million of its $1 billion in funding. And the latest red flag is that they changed their address to a Miami UPS store. DWAC was at one time trading at over $170 a share. It is now down over 90% and continues to fall. Keep in mind that SPACs have a nominal value of $10, so anything over $10 is overvalued on DWAC. Now, there are two stocks that are doing quite well. They are doing everything right. They're growing, and these two stocks you might want to consider buying the dip on. The first one is Southwest Airlines, ticker LUV. They hired a record 3,000 flight attendants so far this year, and they have another 7,000 flight attendants in its hiring pipeline. Airlines are in a fierce battle for airline employees, and Southwest appears to be winning the battle. One risk you should be aware about is that the flight attendants union is currently in talks for a new contract, so there might be some issues down the line. Still, LUV has fallen significantly this year, and its PE ratio is down to 20 with a forward PE ratio of 15. So LUV is not yet undervalued, but it is at fair value, so this might be a stock that you might want to consider buying the dip on, because I do think this stock will rise once the recession is over. Now, before I get to the last stock that I think is a good buy, I do want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold any asset. These are just my opinions, which may or may not be accurate, so please do your own research before investing in any asset. The second stock that I like right now is Apple, ticker AAPL. There have been a lot of concerns about how much manufacturing Apple does in China, given the issues that the governments of China and the United States are having right now, and how this might affect our future relationships and the ability to get parts and finished products out of China and into the US, as well as around the world. So I'm happy to see Apple making a big shift in moving its manufacturing from China over to India. I think this is an excellent move that will protect Apple against future Chinese-US relationship problems in the future. Now, even though I like Apple as a long-term play, I would not quite buy into it yet. Apple is one of the few stocks that has not yet really fallen since this bear market started. The PE remains quite high at 25, so I would give this one a little bit more time to fall before I bought in. I will give you an ideal buy-in price of $113. That is where the 50-month EMA currently stands, and based upon the history of how Apple trades, it usually hits the 50-month EMA before bottoming out and starting to go up again. So $113 would be my ideal buy-in price on AAPL. If you want more stock picks like this, make sure you hit the like button and subscribe so that you don't miss out on any of my future videos. And make sure you be a good friend and share this video with your friends and family so that they can find out about these great stock picks as well. If you'd like to know more about market sentiment and when I think the market is going to bottom out based upon the technicals as well as the fundamentals and history, make sure you go watch the video that I uploaded here where I explain exactly when the market's going to bottom out and start going back up again.